What's going on, everybody? This is Robert from robertearlreed.com, and this is the Crypto Corner. Just wanted to take a look at a little bit of price analysis for some of the following cryptos, which is Bitcoin, Ethereum, Bitcoin Cash, Ripple, IOTA, Litecoin, NIM, and Cardano. Been looking at a little article here. Let's dive right in. The South Korean government has confirmed that it has no plans to ban cryptocurrency trading in the short term. This is a major relief to the markets, which were reeling under selling pressure. Warren Buffett's warning that the cryptocurrencies will have a bad ending also did not have any noticeable effect on the prices. Now, during the recent debt decline, instead of being perturbed, many traders saw this as a buying opportunity and rushed to open new accounts. The cryptocurrency exchange Binance saw a whopping additional 240,000 users in just an hour on January 10th. However, unlike the previous occasions, the pullback from the lows has been muted. Is this a sign of waning momentum? Let's find out. Bitcoin broke below the 50-day SMA on January 11th. And soon then, it has been struggling to climb above it. It has managed to hold on to critical support levels between the trending of the symmetrical triangle and the neckline of the head and shoulder pattern. If you look here on the chart, is what they're saying here. And if Bitcoin fails to rally within the next 2 days, chances are that it will turn down and break below 12,500, sinking into the $8,000 levels. On the other hand, if the cryptocurrency clings on to the support and moves above the 20-day EMA, it will indicate a short-term bottom. Very aggressive traders can buy on a breakout above 14,500 and keep a stop loss at 12,500. The target objective of this trade is 16,500. This is a very risky trade, hence should be attempted with only 25% of the usual position size. This is some pretty good advice here, guys. Risk-averse traders should wait for a reliable setup to form, as there is no clear trend on the BTC USD pair as long as it trades inside the triangle. See the graph above. It's better to wait for a breakout or breakdown from the triangle before initiating any positions. I agree for the most part. Ethereum has been comparatively strong during the South Korean ban episode. This shows that its owners are not in a hurry to sell their holdings. The buyers jumped in at the 38.2%, the Fibonacci retracement levels of the latest rally from the 640 to the $1,382. The uptrend remains intact, and the bulls are likely to make another attempt to break out of the recent highs at 1382. If the price breaks out of the overhead resistance zone of about 1382 to 1434, it will signal the start of the next leg of the up move, which can carry the Ethereum USD pair towards its targeted objective of $1,814. Now, on the downside, support exists at the 20-day EMA and at $965, which is the intraday low on January 8th. However, as we expect a strong resistance between 1382 and 1434, we are not recommending any fresh long positions in it. That's some pretty good information there, guys. See the chart. And I am on the Cointelegraph for those who want to take a look at the article. Continuing, the Bitcoin Cash broke out of the range on January 10th. However, contrary to our expectations, it could not rally to 32.49. It faced strong resistance at 29.50 and turned down from here. Tend to be range bound, but in a large range. On the upside, 29.50 is a critical resistance, and on the downside, 22.91 continues to be a strong support. So we have to look at the resistance level and the support level. And I think on the resistance level, I think many people are, just taking out profits at that time, but there's still value in the crypto. But traders should wait for a breakout above 29.50 to initiate long positions. The breakout is likely to carry the Bitcoin Cash USD pair towards the highs. On the other hand, a break down below 2072 or 2072 can result in a decline to about 1733 and thereafter to 1200, which would be the new support level should that happen. Now, everybody likes Ripple, right? XRP. Let's talk XRP. For the past 3 days, Ripple has been attempting to hold the uptrend line. The bulls continue to buy the dips close to the $1.50 level. The cryptocurrency is currently correcting inside a descending channel. If the bulls succeed in breaking out of the resistance line of the channel, a move to 285 is likely. Strong support exists between $1.76 and $1.40, which are 50% and 61% Fibonacci retracement levels of the recent rally from 0.22 to $3.31. But we don't find any reliable buy setups on the XRP USD pair. Hence, we are not recommending any trade on it right now. Yeah, Ripple is right now. It's just a little. We can look at the current charts here if we have time in this blog, but Ripple is not doing what we had all hoped at this time right now, but just hold strong. IOTA has continued its range-bound trading between $3.03 and $4.34. Yesterday, January 11th, this is at the time of the article, of course, folks, the bulls again defended the low end of the range because people, they like their IOTA. We expect the range to hold, hence traders can buy on weaknesses towards $3.10 and keep to stop loss to about $2.70. Now, the IOTA USD pair should attempt to move towards $4.34 once it breaks out of the downtrend line. A move from $4.34 is likely to propel it towards the upper end of the range at $5.59. Wouldn't that be nice? Our bullish view will be invalidated if price breaks down and sustained below $3.03. Let's take a look at a little bit of Litecoin here. Litecoin is still stuck inside the symmetrical triangle. Yesterday, at January 11th, the bears failed to break down of the triangle. The bulls will now try to push prices towards the resistance line of the triangle to about $280. The move will gain momentum above 254. The support is always lower at 215. Now, at the moment, the risk to reward ratio is not attractive to trades. I agree as well. The LTC USD pair will become bearish if price breaks down and sustained below the 50-day SMA. Let's take a look here. XEM. As forecast in our previous analysis, the decline to the trendline support prompt buying XEM is currently in a pullback. Should we trade this? Good question. The traders bought the dip below the trendline support yesterday on January 11th. We now expect the XEM USD pair to rally to $1.56 to $1.68, somewhere between there, which are 50% and 61% Fibonacci retracement levels of the recent fall from $2 to $1.07. The aggressive traders can buy at the current levels of $1.38 and keep a stop loss at about $1.06 below yesterday's lows. Though the initial risk to reward ratio is not attractive, we believe that buying near the strong support of the trend line is a good strategy. Always look at the support levels there. So when it gets into the recent support levels, then it's probably a good buying opportunity. Let's look at ADA and BTC. Buyers bought the dip below the trend line on January 11th. We had forecast a pullback from the trend line in our previous analysis, but advised waiting for a confirmation of a bottom before buying. So can the traders buy now? Let's take a look. If the pullback sustains above the 0.00005 levels, we expect the move to extend to the 0.0006 levels or to the 407 level, which are 50% and 61% Fibonacci retracement levels of the recent fall, which is a good strategy. you guys. So traders can buy the ADA and BTC pair at the current levels and keep a stop loss at 0.404. Here too, we're recommending a trade without an attractive risk to reward ratio because we are buying close to the strong support of the trend line from where the price can surprise on the upside. So first and foremost, guys, this is just simply for informational or educational purposes. This is not financial advice. I'm not a financial advisor, and this is just an article just to keep you guys informed in some of the information that's out there. We just want to keep you abreast of what's going on in the crypto community, what's going on in the charts. Definitely do your own due diligence, do your own research, and obviously you all know if you put money in, you could lose it all. So point of advice is never to put into the cryptos what you cannot stand to lose. Never just throw your rent money in there or your bills or anything like that. Just do your research, take your time, do your analysis, make your own decision. This is just simply for information and sometimes for a little education, just some interesting reads out there. But you guys take a look at the charts, go look at all the resources that are out there for you so that you can learn as much as you possibly can about this crypto space. This is a very exciting time. This is a very good space, very interesting. It is a tremendous opportunity. However, a tremendous opportunity does carry with it tremendous risk. So you guys should be very, very careful with that. It's been my pleasure talking to you guys today. Smash the notifications buttons so you can get all the updates in my crypto corner. Like, comment, subscribe. Until next time, go ahead and conquer with some cryptos. Thanks, guys. See you on the next video.